Hey guys, it's DMM here once again, and I'm really excited to show you something that has confused a lot of traders in this space, especially new traders. And I'm going to be explaining that in the simplest way possible that you understand what market structure is at the end of this video. So, market structure is what makes up the market. Without market structure, we don't have something called a market. Because why? There will be no way to be able to identify what is actually going on in the market without market structure. And so, whenever you come to a chart, the first thing you see is something like this. You see this, 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 you see this. Now, this is called a bullish trend. And in a bullish trend, we have higher highs and higher lows. So, this is a high. This is a low, this is an higher high, and this is an higher low. So whenever we have a high that is higher than the previous high, that is called a higher high. Whenever we have a low that is higher than the previous low, it is called a higher low. And so this is called a bullish trend. And now when you come here, you see a bearish trend. And what do we call a bearish trend? When we see a high that is lower than the previous high, and we see a low that is lower than the previous low. So this is a low, this is a lower low, this is a high, and this is a lower high. And so this is what we call a bearish trend. And this is what we call a bullish trend. Okay, so that is, I hope that is understood. Now, I want us to be aware that there are valid higher highs and there are valid higher lows. And at the same time, there are valid lower highs and there are valid lower lows. So I'll show you an example on the chart what I'm talking about. In this particular situation, we have this high here. Okay, this is a high and this is the low that created the high. So in this particular case, you might be like, what trend are we looking at? Now, when you see that there is a high that is lower than the previous high, like this is a high that is lower than the previous high. You see that we are beginning to have something looking like a bearish trend. And you see a low that is lower than the previous low, then you see that we have a bearish trend and it is confirmed. Now, there is something we call break of structure in the market. And what is break of structure? Break of structure occurs when we have price take out the previous high. Okay, price take out a previous high and continue from there. The same thing happens here. Price takes out a previous high and continues from there. So we begin to have higher highs and low and higher lows. And highs are being taken, highs are being taken, highs are being taken. Now, in a situation whereby we begin to have lows being taken, that is called a break of structure, like this. This is a break of structure. It is otherwise known as BOS. So that is a break of structure. So that is what that is called. Whenever you see a low being taken to, that is a break of structure. That is a BOS. That is a BOS. So that is a break of structure happening there. So that is what happens in the market that you call a break of structure. And so whenever we have something like this happen, we have something like this happen, we have a break of structure happening right there. Because why? We have a higher high and a higher low. And we have a lower high and a lower low. So we have a high being taken, we have a lower high, and we have a lower low. We have a low being taken in this case. Okay, we have another low being taken in this case. So this is the low that is taken again, and this is the high that we have here. So from here, we have another high in this case, and we have a lower low. Okay, so this is the low that was taken. This is the low that was taken, this particular low that was taken, and this is the high that caused the low to be taken. Right? So from there, we know that we have a very valid bearish trend. Okay, we have a valid bearish trend. And even if you look at it on the smaller ones, you can see that highs have been taken. Sorry, lows have been taken. This is a low being taken. This is another low being taken. This is the low being taken. And from there, this low is being taken. So from there, we can conclude that we have a bearish trend. However, whenever we see highs being taken like this high taken here, we are having a higher high, and then this low is higher than this low. Then we have a higher low too. But one thing about bearish trend, bearish trend is that it is always the lows that are being taken, not the highs that are being taken in most cases. So in bullish trend, we have the highs being taken. So when the highs are being taken, like in this case, we have higher highs. This is bullish. And so from there we conclude that we have a bullish trend. So price might come down at some point to take some lows and just to be able to get some clarity. So like in this case now we have higher highs, 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 higher highs. And so you can conclude that we have a bullish trend in this case. Now to further this class, I want us to know that there is something we call a swing leg. And what is a swing leg? This particular eye can serve as a swing leg. This whole thing can serve as a swing leg. And how does that happen? In that case, we have something like this. Something like that. We can have something like this in the structure. Sorry, the drawing is not so good as I would have expected. So we have this. So you might see something like this. So this particular from A to B, from A here to B, from A to B to B, that is a swing leg. From here to here is a swing leg. And what happens in the swing leg? We have price moving from one high to another 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 high, or from one low to another low to another low to another low. Now let me show you an example of what I'm saying. For the swing leg in this case, we have this high, and the other time I said that we have price doing some of these little ones. Sometimes they have their own structure. So you see price coming here to take this high. In this particular case, it takes out this high too, and then it comes down and takes out this low in this case. Okay, and then we have price again. Come, take out this low, this particular low, and then we have this high, we have this low, and then it goes on and on and on like that. Now, all of this is happening inside of this particular leg. It's happening inside of this particular leg. You see how straight the leg is, because the market is made up of triangles and straight lines. So this is like the side of a triangle, and this is the second side of a triangle. So inside of this triangle, let's just say that this is a triangle. Inside of this triangle, the left side, we have some things going on there. These ones, the higher highs and the higher lows inside of this particular side of the triangle. And then on the right side of the tri on the of the other of the triangle, we have some other motions going on inside of it. And so we have this one as a swing. This left, this right leg of the triangle is called a swing leg. This left leg of the triangle is called a swing leg. So in this case, we have something called internal structure. What is going on here is internal structure. There is internal structure. That's internal structure. We have the external structure. This is the external structure, which is the left leg, and this is the this is the external structure, which is this right leg too. So what goes on here is internal structure. So in internal structure, we can also have higher highs and higher lows, just like here. We have higher highs and higher lows, higher highs and higher lows. Okay, higher highs, higher lows, like this. So right now I'm going to go to the example on the chart, and we are going to take trades based on what we have learned. We're going to take trades based on what we have learned. So I want you to let me know in the comment section if there's any area of this thing that you do not understand that you want me to go back on, or by the time we finish this video, if there's something you would like me to talk about. There's something you would like me to talk about. Right, so in this particular case, we have a low here, and then we have an higher low here. Okay, so this particular one we will call a bullish trend, because why? We have a low and we have a higher low, and then we have a high and we have a higher high. All right, so in this particular case, you can say that okay, we have a bullish trend, and then you see price beginning to calm down. In this case, you still feel like we have this high, and you see this lower high. You see this high being lower, and then you see another high here, and you see that a low is being taken, and then we have a lower low. We have a lower low, a lower low, a lower low. So we have a lower low too, and then we have this high that was here, creating a lower low, which is here. Then we have this high, sweeping this high, then coming to create something that looks like a low. But in this case, this is where we begin to see that, oh, there is a difference. We see this low maintaining its low. Okay. By the time this one comes, it doesn't take it out. It doesn't take it out. You see that? So, and then we still go ahead and make a higher high. So then that is where we begin to observe that, oh, okay, something might be happening right here. So all of this that is happening, this is internal structure. We still have, okay, we still have low here. And then we see that price comes again and takes out this low, this case, takes out this low in this case. Okay. And then we have a lower high and then we have a lower low. So until we have a high that takes out these highs, we can't really say that we are bearish, that we are bullish again. So it might continue like this and it might still remain, it might make a new high. Right, so in this case, we have a lower low. Okay, we have a lower low. It appears that we have a higher high here, but that is not confirmed until we see another higher high. And so you see that in this case, we have a lower high here again, and another lower high. So we are still bearish. So you see price touch it into the lower high and then take out this low. And then from there, you see the continuation. So this is what market structure is. Whenever I come to the charts, the first thing I look out for is what has happened in this market. What high has been taken, what low has been taken. So in this particular case, if you ask me and I came to the chart to analyze what is going on here, okay, this would be the low that was there previously, and then we took out that low, took out that low, we took out that low, and then we have an high here, and from there we took out this high, took out this high. So we begin to feel like, oh, we might be bullish, but then we need to confirm how bullish we are. And so you see price do this, and then we have an higher high. So this is a confirmation that we are bullish on this particular leg. We are bullish. And so from there, we can begin to look for entries. And I'm going to be talking about how you can find entries during a market movement in the next video. So we are bullish in this case, and then you look for an entry, and then you buy, then you target the previous high, which is here. So if price is able to take out this previous high, then we are still bullish. But if price is not, then that means that we do not have enough momentum to take out the high. Okay, so we take it out eventually. We take it out eventually. So that means we are bullish on this particular leg. And so this is how you trade. You take your trades from a place of confirmation to take out the previous high. And that will be the end of this video. And I wish you guys good luck and good trading. So if you want me to talk about any other thing, or you have questions that you want to ask concerning this video, please put them in the comment section and I will give you a response as soon as I can. Thank you very much.